For over 50 years, the silver market has been one of the most distorted financial systems on earth. A market shaped not by supply and demand, but engineered behind closed doors by a handful of global institutions with the power to bend reality. In 2016, a United States federal court released a document that Wall Street hoped the world would never see. Inside it were private chat logs between traders at UBS, Deutsche Bank, and Barclays. They called themselves the Mafia, and in their own words, they bragged about smashing silver, hammering silver, bending silver, manipulating the price before the daily fix. This wasn't a rumor. This wasn't speculation. This was the truth they never wanted you to know. Traders coordinated with each other in secret chat rooms with names like the Mafia, the Bandits, the Cartel, and yes, those were the real names. In these chat rooms, they mocked clients, shared confidential order flows, coordinated attacks on silver prices, and openly bragged about how aggressively they could push the market. One trader typed, "We smashed it good." Another replied, "If we do it together, we screw other people harder." They discussed which levels to hit, which orders to trip, which stops to trigger. They talked about creating fake volume, spoof orders, and walls to trick the market. They were not responding to price movements. They were causing them day after day, fix after fix, year after year. And for nearly a decade, this cartel controlled the global silver price from inside their private digital clubhouse. This wasn't a conspiracy theory. This wasn't a rumor on internet forums. This was a documented, proven, federal court-verified truth. The silver market was rigged from the inside. Chapter 2. The real motive. But here's the question everyone should be asking. Why? Why go to such lengths to manipulate silver? Why risk criminal charges? Why jeopardize the reputation of trillion-dollar institutions? The answer is written plainly in a separate 44-page Bullion Banking Analysis report published by International Financial Services Center's Authority, a document that breaks down in cold, quiet numbers the entire business model of the Bullion Banks. And inside, it reveals the motive that connects every piece of this puzzle. Up to 90% of all precious metals profits come from trading, not from storage, not from custody, not from vaulting, not from transportation, not from clients, trading. This means one thing: stability destroys their business. Calm markets produce almost nothing for them. Predictable prices are bad for their revenue. A quiet market is a dead market. But volatility, manipulated price swings, sudden crashes, aggressive spikes, massive volume, that's where they make the real money. And even more profitable than volatility is control. If you can control the price, you can control the profits. If you can cause a crash, you can profit on the way down. If you can spark a rally, you can profit on the way up. If you know exactly when the market will move and your clients don't, you have the closest thing to guaranteed profit that exists on Wall Street. So the chat rooms weren't the disease, they were the symptom. The disease is a system built to reward manipulation and punish honesty. Chapter 3. Cartel Operation. Now, let's take this further. The bullion banks don't just trade metals, they own the entire ecosystem. Here's how deeply their influence runs. They operate the largest precious metal vaults in London and New York. They run the clearing system that settles global gold and silver transactions. They store the metal for the biggest ETFs in the world. They provide the derivatives and hedging services used by miners and refiners. They lease silver to industrial users at rates they set. They sit on the committees that oversee benchmark pricing. They move physical bars through airports and armored trucks. They write the majority of the paper contracts traded on global exchanges. They advise central banks on their gold policies. They even influence how much metal flows in and out of the world's largest vaults. Every layer, physical, paper, regulatory, logistical, is under the control of the same small group of institutions. A miner trying to hedge production goes through them. A refiner trying to buy metal goes through them. An ETF needing to add or remove bars goes through them. This is not a market. This is a monopoly disguised as a marketplace. And for decades, The world had no idea. Chapter 4. Storage is just a front. One of the biggest myths is that bullion banks are custodians, safekeepers, vault managers, guardians of metal. But the truth hidden inside the profit analysis tells a different story. Vaulting and storage, the part the public thinks is the core business, make up less than 10% of total profits. Correct. Storage is a side hustle, a rounding error, an afterthought. The real profits, the lifeblood of the bullion banks, come from the paper game, the derivatives, the swaps, the forwards, the futures, the unallocated accounts, the lending, the synthetic exposure, hundreds of claims on the same ounce of silver, paper built on paper, backed by metal that may or may not exist. The vaults are not the business. They are the illusion that makes the business possible. Because as long as people believe their silver is safe, the banks can keep creating more claims than metal in existence. The system only works if people never ask for their bar. Chapter 5. The breaking point. But now, for the first time in half a century, this system is failing. Silver is breaking above its all-time high. A breakout not driven by speculation, but by physical reality. Global inventories are collapsing. COMEX registered silver is being drained month after month to levels no one alive has ever seen. London vaults are hitting lows not witnessed in more than a decade. Swiss refineries are running around the clock just to keep up with global demand. Indian imports have exploded as the country hoovers up every spare ounce on the market. Solar panel production and electric vehicles are consuming silver faster than it can be mined. Industrial demand is overwhelming supply in a way even the bullion banks cannot ignore. This is a nightmare scenario for a paper-heavy system. When the physical metal begins vanishing, the price becomes uncontrollable. The paper market loses its anchor, its credibility, its ability to dictate reality. And that is exactly what we're witnessing today. A physical shortage meeting a leveraged paper system creates only one outcome: a price explosion that cannot be contained. Chapter 6. Why silver? Silver has always been the most dangerous metal for the financial elite, not because of its value, but because of its size. The entire silver market is tiny compared to global finance. It only takes a few big players or a sudden industrial surge to stress the system. But silver is more than money. It is the metal of modern civilization. It reflects infrared light. It's the best conductor of heat and electricity. It is essential to solar panels, electric vehicles, high-speed data, medical applications, military hardware, and artificial intelligence. We cannot build the future without silver, and yet, the price has been artificially capped for decades. Why? Because if silver is allowed to rise to its true free market value, it exposes the fragility and the leverage of the entire system. A skyrocketing silver price draws attention, questions, audits, physical demand. It forces the paper system to prove that the metal actually exists, and that is the one thing the cartel cannot allow. Chapter 7. The fines that prove the crime. Eventually, the truth became impossible to hide. In 2020, JP Morgan, the largest and most influential bullion bank in the world, was fined $920 million for manipulating precious metals markets. It was the largest financial penalty for market manipulation in U.S. history. And it didn't stop there. The bank paid another $200 million for spoofing and sweeping across multiple years. Headline after headline declared victory. Justice served. Manipulation exposed. JP Morgan punished. But buried beneath the headlines was the truth no one spoke about. To JP Morgan, these fines were meaningless. They earned billions trading precious metals. A $920 million fine is not a punishment. It is a business expense, a write-off, the cost of doing business. The message was clear: manipulate the market, make far more than you're fined, and continue operating the same way tomorrow. These fines were not deterrents. They were confirmation that the system allows the crime as long as the price is paid afterward. $1 billion to protect decades of paper metal profits for a bullion bank. That's a bargain. Chapter 8: The Reckoning. This is not the end of silver. This is the end of the illusion. A 50-year structure built on manipulation, leverage, and artificial scarcity is finally unraveling. For decades, a handful of institutions dictated the price of one of the world's most critical metals. But today, we are witnessing something historic. The physical world is defeating the paper world. Reality is overpowering fiction. And when truth meets leverage, truth wins. This is the collapse of a 50-year cartel. This is the return of real price discovery. This is the true beginning of silver. This is Smart Wealth Code, your compounding machine,